All right. Hey, everybody. This is Mark Yusko from Chapel Hill. As people are connecting, I will offer welcome and happy end of spring, almost beginning of summer. Not quite, but starting to feel pretty warm down here in Chapel, although it is raining every day. So it's like living in Ireland again. We are going to dive in here to what I hope is our last around the world talking about tariffs. I'm tired of talking about tariffs. I'm going to talk a lot about tariffs today. But hopefully this will be the last one. The title is Tariffs, Tariffs Everywhere. At this point, we could all use a drink. Um, Trump was doing his Miyagi-san imitation, tariff on, tariff off. And then this week he did we have a deal with China and everything's good, everything's green, everything's thumbs up. So let's go there. Maybe. All right. So I'm going to go back and review kind of what we've done since February. I'm going to go really fast through the first part and then if you have questions, just punch them in. And then I'll kind of slow down a little bit when we get towards the end. So we started how it started. Tariffs everywhere. Did anyone stop to actually think? And that came from the rhyme of the ancient mariner, water everywhere, nor air drop to drink. Look, Trump thinks trade wars are good and easy to win. He thinks tariffs a beautiful word. Other people would say, not so much. Tariffs lead to trade wars. Tariffs are anti-competitive, and you end up not really protecting anything and destroying jobs. Tariffs are a tax. Let's just be very clear. Creates winners and losers. You protect some of your non-competitive industries at home, but at the end, everybody loses. So why are tariffs even a thing? Look, tariffs were used a lot in the late 1700s and 1800s. Grover Cleveland, William McKinley, they were big fans. Herbert Hoover, he wasn't really sure, but then these guys Smoot and Hawley talked him into it. And it was a bad idea. Now, Trump is back as tariff man back in 2016. And look, he had this fantasy that he was going to reshore American jobs and reduce our deficit with China. Neither one happened. In fact, they both got worse. Well, why? Well, it's just math. We print money, we send it overseas, and we buy stuff. So we buy more goods than we produce because we're a consumer nation, we're a wealthy nation. And tariffs don't fix that. In fact, tariffs lead to trade wars, and trade wars have no winners. Now, everyone was against tariffs in 2018, but curiously, half became supportive because everyone in the media kept telling them that there was this unfair playing field and that everyone else was charging us these big tariffs. Well, that wasn't exactly true. And what Trump said is he wanted 1930s style tariffs. But the problem is no amount of tariff is actually going to change the balance of goods and services. So he came in with this plan in 25 saying that he was going to fix it, but you're not going to change consumer behavior with tariffs. In fact, it's going to make the problem worse because they're the ones that foot the bill. Again, it's like Mexico didn't pay for the wall. The exporters don't pay for tariffs. We do. So it started out as Mexico and Canada were the bad guys, but it was really all about China. And as usual, the press kind of missed the point. So this is going to hit them where it hurts. Well, it would have 30 years ago, but now they export to the rest of the world and we're only 8%. So what this is going to do is lead to slowbalization. And slowbalization threatens global growth. So, we went through the 10 surprises, and the number one fear this year was a global trade war. So, one surprise was that we'd have a recession. Well, this would lead to that. And look, the central banks were cutting rates as if there was a recession. And first quarter estimates for GDP were really quite ugly. Surprise number two was winter is coming, or printer is coming, and the Fed was going to have to print money. Now, the markets were saying the Fed has to cut 2.6 times. Four of the Fed governors say hell to the no, not any. And M2 growth actually resumed. Now that's interesting. How did they get M2 to grow without cutting rates? So the bear and the maiden fair, the surprise would be that the bear market recovers. Look, we went into extreme fear by February, and everybody was talking about the bear market was awakening. Law of gods and men was that, the Mag 7 suddenly stands for must acknowledge gravity. Look, everybody was overconfident in AI, that AI was going to change the world, but gravity did start to shake that faith, and the Mag 7 was down 20%. It entered a bear market long before the rest of the markets. So now as watches ended, the surprise this year was that the dollar, after having just an amazing year last year, would shrivel back to Bruce Banner. And that's exactly what it did, like clockwork. House of Black and White, Saudi, which has been in the news this week, was struggling because they need oil to be higher unless suddenly they become an AI powerhouse, which is part of their plan. But in the short run, they needed higher oil. So all they had to do was turn on the spigot, but they kept refusing. And because they kept refusing, the price of the oil was stubbornly falling. And it was looking actually kind of like a recession. So the red woman, Crazy Christine, was going to cut interest rates more than everybody else. And she did. And she turned the printer to maximum burr, and European markets went up, and went up actually a lot. So the dragon and the wolf, the surprise was that the Trump tariffs actually wouldn't thump Chinese stocks. Shanghai index would continue to fly. And look, maybe this was the plan all along. Maybe China has been goading us into this because they have all the cards. Or maybe they're even playing a different game like Go. So surprise number 10 was that, look, everybody thought 4-year cycle in Bitcoin was over and prices were up only. So the power law supported 170,000 peak. And, the guy on the right was basically saying, at 170, you should trim, but I probably won't. When it gets to 300, then I'll sell. The Golden Crown, the surprise would be that gold continues to glitter and it would hit 3,000. It went to 3,000 within the first couple of weeks. So we got that one. So how it escalated. So by March, anniversary of the lockdowns in 20, is the investment environment starting to stink. And charts were all red and people were getting nervous, and, the bear was back. And we talked about some real words of wisdom on tariffs, which were from Ronald Reagan. Basically, the result is that more tariffs, higher and higher trade barriers, less and less competition, and then the worst happens. Markets shrink and collapse, and business and industry shut down. Millions of people lose their jobs, and you can't see that effect like you can when you save a job from anti-competitive practices. But Trump doubled down on his tariff rhetoric. He literally threatened a full-blown trade war, and that he was going to get trillions of dollars, which is just so dumb. I mean, we weren't going to be paid by anyone. We were the ones paying. Crazy. Surprise, we talked about number one is the recession was to be here. Look, the bond markets were basically saying, J-Pow, you messed up, and you're running the risk of seeing a serious recession. Markets were starting to price it in by March. The Fed math wasn't mathing. They said you're going to have 1.7 GDP growth this year. How do you get that if it's negative, 2% in Q1? Well, you don't. It was kind of starting to look like 2001 Remember 2001, negative first quarter, positive second quarter, negative third quarter, and a positive fourth quarter. We ended up 1% for the year. That's still a recession, just not a very deep one. So printer is coming. J-Pow shifted back to Dove. Everyone thought two cuts were coming for sure. M2 growth was growing again. The Fed balance sheet stopped shrinking. So basically the markets were saying there's a 100% chance that printer is coming. In terms of the bear market, look, portfolio managers had their highest exposure ever, yet no one was buying protection. That's usually when you need it. And as you might expect it, the markets went down. Portfolio managers then sold because they always either buy what they wish they would have bought or sell what they're about to need. And their net long position was the lowest since 2020. Now, as the smart money sells, who was buying the dip? Well, the dippers. The retail were lapping up the S&P, particularly the Mag 7. And look, markets hate uncertainty. But in March, that maximum uncertainty actually could have been, as has historically been, a bicycle. And we talked about that there was a chance that, Trump would flinch or back down or flip-flop or do the Miyagi-san, tariff on, tariff off. And VIX was telling us that something bad had already happened. When it hit 40, that was probably the time not to be selling like the institutions were, but maybe the buy the dippers were right this time. So Mag 7, look, the Mag 7, gravity had a hold of the Mag 7. I mean, it shed $3.3 trillion. That was bad. And the volatility was actually not unprecedented and therefore could have gotten worse. And we were only 2 weeks away from the first flip-flop to save Mag 7 because Mag 7 started to get, you can't call it cheap, but it was not as crazy overvalued as it had been. NVIDIA, okay, NVIDIA was struggling. It was priced for perfection. If they couldn't deliver, it was going to go down. The dollar was going to go down, and it did. Oil prices, Trump said, look, I need you to cut. I need oil prices down. I need to get consumers something to pay these tariffs with. That was his plan, right? If you lower gas prices, that's like a tax break, but then they use that money to pay the tariffs. So it's just a way of shuffling the deck chairs, which we'll talk about in a little bit. So they politely declined, and oil prices continued to fall. So Christine, she cut rates, and the weird thing happened. The euro started rising. Now, that makes no sense at all. If you're cutting rates, you're making it less advantageous to hold euros. So that didn't make sense. And the European markets, which had been dead money, actually showed signs of life. So this was even the auto companies, which should have been, going down with trade war. And bond market was getting massacred. But stocks and actually bank stocks, which has been unbelievable trade, up almost 40% this year. So Japanese equities was pretty simple. Ueda-san was an academic. He didn't really get the whole Abenomics thing. He said, I'm going to raise rates and I'm going to, strengthen the yen. And I don't really care if that means that, inflation's back, which maybe that's a good thing. Japanese corporate profits are down. That's definitely not a good thing. And so where the head goes, the body follows, as my wrestling coach used to say. So yeah, you can strengthen the yen all you want, Ueda, but that's going to be bad for stocks. And it was. So Chinese stocks, look, no one wins in a trade war, but the biggest loser was definitely going to be the US, and China had the least to lose. In fact, they probably were in the pole position. Chinese equities bounced hard in March, and yet they were still super cheap. Their tech stocks relative to US stocks were super, super cheap, and yet nobody owned any. Well, except this guy. I mean, David Tepper, half his portfolio was, and when Becky Quick asked him, don't you worry about tariffs? My hedge is I don't care about tariffs. Um, so Bitcoin, look, Bitcoin was following the network adoption as every S curve does. 83% of institutions said they were going to increase exposure this year. That said, right on schedule, we got our April correction. You know, when you have a good year in the previous year, you get an April correction because people have to pay their taxes. But we didn't hit the low of 72K, which is what was predicted at the beginning of the year. Fear kind of came back in, but sentiment overall was nearing all-time lows. And a whole bunch of companies then said, well, we're going to start buying. And 80 plus companies became Bitcoin treasury companies. And Little Metaplanet, which I sit on the board of, got up to all the way to number 10. High correlation between global M2 and Bitcoin prices. So Bitcoin looked like it was ready to surge after another little dip in April. And certainly that played out. The Golden Crown, the gold blew right through our $3,000 target. And monetary value of gold surged to about 10 trillion, with Bitcoin only at 1.7 trillion. So we thought, Bitcoin, as it displaces gold, was a pretty good trade. Okay, fine. Gold beat stocks over the past year on the left, but what about 25 years? Stocks are always better. Gold crushed stocks over 25 years. Think about that. All the money that's spent trying to pick stocks, and all you had to do is buy a bar of the Barbarous Relic, and you did twice as well. That's a crazy stat. So to summarize, 400-page in gold we trust report, you don't own enough. At the current price, the miners were minting money. So then the miners actually went up even more than gold. That has been the trade of the year. So how it was going, a month ago, we were together right after tax day. And, Trump, yeah, he kind of lit the market on fire with the trade top. But he's like, well, I could figure this out. And Adam Smith basically said, it's in the interest of the great body of people to buy whatever they want from those who sell it cheapest. Merchants and manufacturers confounded the common sense of mankind. And anytime people try to mess with free markets, bad things happen. And look, he is the GOAT of economics. So in his history, up until 1913, there was no income tax. Okay, so this whole idea of, well, we like tariffs in the 1800s. Well, of course we did, because the only way government could get funded was to have tariffs. Well, now we collect income tax and sales tax and property tax and a whole bunch of other taxes. We don't need tariffs, and actually wasn't going to be that much. And so this was basically the robber barons, right? In the 1910s, the robber barons were introduced as basically the government stealing from the people to pay for themselves, which is kind of what it was. So this guy wrote this cool article talking about how Trump is basically bringing back the robber barons in the form of liking tariffs. Kind of interesting. And if you don't study history, you're doomed to repeat it. So why have there only been 3 times when tariffs were supposedly a good thing? Once in 1828, that ended in depression. Again in 1930, ended in depression. And this time in 2025. Now, I'm not saying it's going to end in depression, but it's always been a bad idea. So Trump declared April 2nd, Liberation Day, make America wealthy again. The Economist said, yeah, it's Ruination Day. You're toast. The market didn't like it. Look, he had the second worst performance as a new president ever. The only one worse was Hoover. So it's not good company. And look, last time he tried this, so the first time he tried tariffs in 2018, China retaliated with ag tariffs, and all of the money, 92%, I shouldn't say all, 92% of the money that supposedly was collected basically was a bailout to farmers to buy their votes. Interesting. He did get reelected that way. Trump demands China call. And she said, not calling. Um, so Trump went to Silly Town. I mean, he basically said, I'm going to take tariffs to levels that are basically an embargo. And she said, fine, no cargo for you. They just shut down shipments to the US. Oh, and by the way, no rare earth minerals. And so WTO said, if you guys are going to be this crazy, we're just going to say there's going to be no global trade this year, which was a pretty good bet. If there's no global trade, that meant the S&P had 40+% downside. Now, that didn't mean it had to happen. And look, the last time a guy tried this, it didn't end well for the GOP. That is a blue wave, if ever you've seen a blue wave. And Trump's popularity was sinking, even amongst his faithful. So on the recession, okay, recession odds went up to 55%. Fed says, hey, don't worry about it. Economic indicators were basically saying we're in recession. We've never been this low without being in a recession. Job announcements, haven't seen those since global financial crisis. That was recession. Bankruptcy filings, recession. BlackRock guy came on TV and said, we're in a recession. In terms of printers coming, look, the Fed, Trump basically taunted him. He's taunting everybody else on Twitter. You might as well taunt the Fed chair. Now, the Fed did stop QT, and they got M2 rising, but they didn't cut rates yet. So that's actually a pretty good feat. Bear market, if you study bear market history, are we in a bear market? Are we not in a bear market? Depends on your definition. The average bear market gets to down 20 and then goes down in the 30s. If you get a structural bear market, like, one of the really bad ones, like depressions, you can go down, 40s and 50s. Look, there was near record selling of stocks, why stocks were falling, and even more planned. Retail investors, they were pretty bearish. U.S. consumer stock price expectations, the lowest they had been in 30 years. Earnings estimates were collapsing. Jeremy Grantham was back saying stocks are going to have negative returns for a long time. Mag 7 was really down. Look at this, $10 trillion. And then in one day, okay, Trump said, oh, I'm going to pause the tariffs. And in one day, we had one of the great short squeezes in history, $4 trillion in a day. NVIDIA, it got a bunch back, but it was still in that bad place. Nothing good happens below the 200-day moving average. It started looking just like Cisco, even though everyone says it's not the same. And now his watch has ended. The dollar gave back all of the post-MAGA gains and was headed for the floor. Dollar was on the verge of having a negative return for 10 years. The Economist, which 3 months ago had said the dollar's the envy of the world. Oh, now we're in a dollar crisis. They're hilarious. Gentle reminder, 80% of all the dollars ever created in the history of the Republic, 249 years, created in the past 5 years. Just let that sink in for a second. Oil prices, Liberation Day, liberated, oil trader profits from their wallets. Oil prices collapsed and were really, it was looking like $26 was in play again, right up until the flip-flop on April 7th. Investors pushed oil stocks to oversold levels. We thought that looked like a really interesting double bottom. And MLPs, after recovering, were back in their long-term trend. So Europe, look, they decided to keep cutting and maximum burr, yet the euro kept rising. Now, what the heck is going on? So despite the euro rising, European equities went up. And in fact, no one would have told you at the beginning of the year that Europe would be the best performing market and that the worst countries in Europe would be the best performers. Interesting. Japan, Ueda-san, man, this guy is stubborn. I mean, he looks stubborn. I get it. And where the head goes, the body follows. This is just bad news for Japanese equities. Chinese equities, okay, they got smacked on Liberation Day, but were super duper cheap. And she embraces tech stocks. Besson says, you know what, we're going to delist them. That was such a bluff. Chinese stocks hit hard, very cheap. Look, the Temu guy did, our Sheen guy and Temu guy did what they did. They said, you know what, U.S. consumers, we're going to raise prices. So guess who was calling their local congressman and senator people who don't want to pay high prices? So China and Tepper don't care about tariffs because they don't have a U.S.-centric view. They take a global view, and they realize that the U.S. is not China's biggest export market. China is not dependent on the U.S. the way the U.S. press paints the picture. It's actually the reverse. So Donald thinks he holds the cards, and she politely says the cards are made in China. So Bitcoin, everyone thought Bitcoin would go down to 72 and then head back up. We hit 72 almost like clockwork right after tax day. And then we head back up. And despite being volatile, it's still the best performing asset this year. There's a seasonality to it. It's usually better in the second half of the year. And as M2 has exploded, that bodes really, really well for Bitcoin prices. Gold went ballistic, got all the way to 3,500. I mean, it was just, gold miners, perfect cup and handle pattern. I mean, it was beautiful. All right. So how it ended. So here we are today, May 15th, and we got the flip-flopper, Mr. Miyagi-san. We got the thumbs up. Everything's beautiful, big, beautiful deal. So foreign leaders have stolen our jobs. Foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. This is one of the most important days, in my opinion, in American history. It's our Declaration of Economic Independence. Wow, the Donald can definitely talk. You have to understand, I'm dealing with all the companies, very friendly countries. We're meeting with China. We're doing fine with everybody. But ultimately, I've made all the deals. I've made 200 deals. That's such classic Trump. There are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation, a little more introspective view from Xi Jinping. This is a huge victory for China's commitment to the principles of equality and mutual respect, a triumph for international trade rules and rightful global order. This agreement sets an example and is bound to inspire other countries to defend their own rights. China has a different view on who won the agreement. So as we needed some old-fashioned, all we needed was some good old-fashioned backroom weekend deal making. Very good meeting today in China and Switzerland. Many things discussed, much agreed. A total reset negotiated in a friendly but constructive manner. We want to see for the good of both China and the U.S., the opening of China to American business. Get great progress made, all caps, classic Trump. Great, okay. So it's funny how these big deals are mostly always announced on Sunday when the market's closed. And it's a little odd that, NASDAQ futures were up 4% on Sunday night. Not the first time DJT told people that equities knew good news was coming. He did say this is a great time to buy, like literally on the day of the bottom. Like the day he paused, and so he did tell you a couple hours before. Now, again, people showed that his entities were buying before that, but that's okay. He did tell us. April Fools, no trade war. We made big, beautiful deal like a rocket. VIX disappeared. The markets have erased all their losses and are back to positive for the year. So what actually happened? Well, the U.S. and China agreed to a 90-day rollback of the escalation. Okay, so it's not no tariffs. It's still 30% tariffs for China and 10% for U.S. farmers. Okay, and for small parcels, it's still 54%. So if you're trying to get stuff from Amazon, you're going to pay 54% more. So there's lots of celebrating on the lowering of tariffs, but those who think today's trade war is a victory can't do basic math. China's average tariff on U.S. goods before April 2nd was 3%. Now it's 10. So we tripled the tariffs that we're paying, or that they're paying for our goods. So we're not opening the markets, we're further closing them. And our consumers have to pay 30% or 54%. Okay. I mean, yes, it looks better than 145%, but it's still 30 to 54%, depending on how you count. And in fact, it's the highest since, there's that word again, 1930s, Smoot-Hawley. So the real question is there damage already done to supply chains? China's factory activity hit a 2-year low. Container bookings from China collapsed 48%. Amazon tried to display for one day that there was going to be a cost to your goods for the tariffs, and the White House labeled that a hostile and political act. Why is it a political act? It tells you how much you pay in taxes or how much you pay in, transportation fees or shipping. But anyway, they withdrew it. Amazon was in free fall. FedEx was in free fall. They've had a massive short squeeze, yet they're still not in a great place. I mean, Amazon is above the 200-day, FedEx really not. And FedEx is the one that really gets harmed by the 54%. Now, Walmart literally an hour ago came out and warned customers that they're going to see higher prices, even though we have lower tariffs, because we still have tariffs. Shein did lower their prices. Okay. Remember, when our tariffs went to 145, actually there were 245 for a minute, Shein basically said, all right, we're going to double prices or triple prices. And Americans freaked because Shein and Temu sell really cheap stuff. So they did lower, but they're still higher than they were. Crisis averted. Everything is awesome. JP Morgan drops their recession call. They say everything's good. Goldman didn't drop it. They said we're down to 1/3 chance, but basically JP Morgan said everything's good. Now, the average American worker would beg to differ. They have not been this pessimistic for a very long time. Job prospects, they think, there's going to be fewer jobs, and consumer confidence expectations are plummeting. Now, the number of Americans in severe financial distress is also surging, particularly those at the low income level. So those are not good. Printer is coming. Whoa, wait a second. I thought the whole idea of this trade war was to crash the economy, to force the Fed to cut rates so that we could get interest rates lower so that we refinance the debt. Well, interest rates are rising, and actually they're starting to rise at an increasing pace. We're about to hit 5% in the 30-year. So TLT has erased all the gains for the year. So, and the Fed has basically said, no, we're not going to cut rates. So long rates are rising. Short rates are not falling. Our debt is now the second largest component. Our interest on our debt is the second largest component of the budget. It's over $1 trillion. That's adding to the deficit every year. And the really scary chart is the one on the bottom right, which is the vast majority of our debt has to be refinanced within the next 12 months. We're running out of time. And a lot of that debt is at very low rates, like 3-4%, some of it even 2%. That number on the upper right could literally explode. So the money printer is going to get turned on. So the Chinese money printer, it's just gone totally parabolic. The European money printer turned back on. The Japanese, okay, Ueda-san, he's being a jerk, but and the U.S. has turned theirs back on. So the bear market, The bear was out of ICU for literally 1 day. We went peak to trough 20% and then on April 9th, the market went straight up and it's been going up ever since. And what's crazy is we've had the same type of V-shaped recovery as we did in 2020, but this time we didn't do any of the monetary or fiscal stimulus. So that actually is pretty, it's a pretty amazing feat. A lot of it may be short squeeze. Hedge fund managers covered shorts at a record pace. Almost never seen higher short covering. And yet they still remain quite short. So remember when Elon sent the short shorts literally to some of the big hedge funds, and basically said, try to short my stock. I'm going to squeeze you. And he did. And he did it really, really well. Well, guess maybe he taught some of the people inside the Beltline the trick, because this could end up as one of the great short squeezes of all time. And look, institutions were the most bearish ever, yet the put call ratio got to a near record low. So wait a second. If institutions are bearish and nobody's buying any protection, well, who's buying? Guess who's buying? Retail investors. Record $40 billion. Never bought more in a month in April. And we've actually now gone 21 weeks of positive inflows into US stocks. That's never happened before. And again, never is a long time. So something weird is definitely going on. So law of gods and men. Look, the Mag 7 has become the Lag 7. In fact, now they're being taunted by Michael Saylor at Strategy, basically saying, you know, if you want a good return, you should buy MicroStrategy, or now Strategy, eventually going to be Strategy Bank, and dump the Mag 7. Remember, he wrote a book saying that you should buy the Mag 7 15 years ago, long before they were called the Mag 7 and when they were a fraction of their current value. And he said, you should buy these stocks because they're going to be worth trillions someday. And everybody laughed at him. So the guy has got a history of being pretty smart. Everything's fixed. The DJT put, so it's no longer the Fed put, it's the Donald put, has kicked in bigly. This is a true short squeeze masterclass. Valuations are not really that good. Growth is really not that good. Earnings revisions are bad. This is a good old-fashioned short squeeze, and it is one for the record books. The make robber barons great again. If you look at who went with Trump to the Middle East, it's not mom and pop stores. It's not U.S. manufacturing. It is the usual suspects. It's, I mean, one, it's the big donors to his campaign, but it's the usual suspects of big tech. I mean, there's a little bit of oil, which makes sense, but it ain't small cap companies. And small caps now are well below their all-time high. The large cap, small cap ratio is making new highs. This is not make America great again. This is make the robber barons great again. So the dollar, everyone got short the dollar. And usually when everyone is on one side of the boat, you're off sides. And guess what happened? Literally the dollar started to surge. The chart on the right is disconcerting. So if you look at where the dollar is relative to yields, the dollar should strengthen a lot. Now, if the goal of this Trump plan is make America great again and get things to sell to other countries, you know, make manufacturing great again, you would want a weaker dollar, not a stronger dollar. This is basically saying the dollar is going to strengthen a lot, and that would not be good for mercantilism. So something's going to break. I'm not sure what, but something is definitely going to break. All right, oil prices, they were in absolute free fall right up until the announcement that there was going to be a trade deal done. So literally right before the weekend. So now oil prices are saying the worst is behind us, so they can go up again. Oil stocks have been en fuego. I mean, they have been now, um, they're not totally out of the woods because you're not back above the 200 day, but they have been rallying since that double bottom quite nicely. And MLPs, they are independent. We don't understand why they went down in the first place. So that's a good one. Um, in Christine, we trust. Even US investors, which don't like Europe usually. We're overweight Europe, and that has worked well, like really well in 2025. That is a big gap. European stocks surging since Liberation Day flip-flop on April 9th. And the Euro banks, I mean, that's the thing of beauty. Japan, look, Japan's long bonds, they have a bigger problem with bonds than we do. And the problem is when you're so much in debt, the only thing that was keeping you afloat was the ability to refinance the debt at lower rates. So if rates continue to go up, then you're not going to be able to buy your bonds and your money supply is going to shrink. And if your money supply shrinks, then your growth rate's going to shrink. This is not looking good for Japan. Now, all that said, all they needed was a yen flip-flop to get, a record two straight, weeks of gains in the market. So again, short squeeze. The yen had been strengthening all year. The Japanese yen carry trade was unwinding at a record pace. And then they did the flip on trade and boom, it was off to the races just like every place else. So the yen carry trade is back, and that, if the yen continues to weaken, if Ueda-san has been defeated, then Japanese equities will be good again. In China, look, the temporary trade embargo, which is essentially what it was when we were in silly town with tariffs, it did lower China exports in Q1. But that's going to hit the U.S. This is expected loadings in the port of Los Angeles. It's going to be a mess come, end of Q2. I don't know if anyone else has experienced this, but we've had a bunch of orders that were supposed to come from Amazon, like on Tuesday, and they call and say, well, it's going to be at least a week. And actually, in one case, they're like, we're not even sure when we can ship. So there's stuff going on behind the scenes that we just need to be cognizant of. Look, the U.S. printed money out of thin air, sent that money to Asia to buy stuff. So we converted paper into stuff. Our industrial production was basically flat. China's industrial production was massive. And what we ended up with is a bunch of Asian countries and a few European countries owning a bunch of our bonds. Well, if they own our bonds, don't they control our interest rates, and therefore don't they have the upper hand in a negotiation? Yes. On top of that, China took all that money and invested in tech innovation, and there's almost no technology now where they don't lead either in patents or citations or actual sales. And if you think about how dominant they are in smartphones or refrigerators or microwaves or, basically any consumer good, and particularly technology goods, there's just no chance we're going to win in a standoff with these guys. It's just not going to happen. So despite the trade war volatility, Chinese stocks are up more than the U.S. It's not shocking. Breaker of chains. Look, Bitcoin back to double-digit gains for the year. This is an amazing stat. 98% of all the wallets ever created in Bitcoin are now in profit. It's pretty amazing. It's pretty cool. There's something called the wick-off pattern that repeats over and over and over again in markets because humans are going to human. And this is a textbook wick-off pattern that has formed in Bitcoin. The real problem is there's just no one left to sell. The amount of Bitcoin left on exchanges that could be sold is really pretty small. So um, when you look at the power law updated, it's basically saying that, we're going to head somewhere. It's now saying, it used to say 170, now it's saying 200K before we end up in the next bear market in 26. If you look at how early we are, 560 million internet users 20 plus years ago, today 560 million crypto users, and the number of searches for Bitcoin are at levels like when the price was 16,000. So we're still super, super early. Bitcoin treasury companies seems like a new one announced every day. Jack Mallers announced 21, went to number 3 on the left-hand side, displaced Metaplanet down to number 11. Nakamoto announced this week. Full disclosure, I'm an investor there too. This is an accelerator, so it's basically a hold co for other new Bitcoin treasury companies being formed around the world, places like the Middle East and Brazil, and really interesting business model created by David Bailey, who runs Bitcoin Magazine. So really exciting time. And look, if everyone starts buying Bitcoin on the balance sheet, Michael Saylor at the big event last week said 700 companies by next year, up from 130 today. This is interesting. Coinbase just replaced Discover in the S&P. Now, the irony of that is kind of amazing. Old school TradFi being replaced by, the new financial services company. Went up 25% in one day. Boom. And, could just be getting started. This is a juggernaut. They just bought the largest exchange, $3 billion M&A transaction. Really good things happening at Coinbase. They're going to they applied for a banking license. This is the future of financial services. So gold, look, humans always buy what they wish they would have bought. They started buying gold after it went up, of course. And now gold has reversed hard because, it was going up when the world was going to end, and now the world isn't going to end, at least not as long as we know. Gold's going down. It also become the most crowded trade. It actually beat the Mag 7, left-hand side, yet it was the most overvalued based on fair value in history, according to Morgan Stanley. So I thought that was funny. All right. Latest episode of Around the World is the last. Tariffs everywhere. It'll get replaced with this one. Corey's back with Hedged, talking about our big themes. And then every Friday, X and I do digital currents. We talked about Buffett waving goodbye last week. Not sure what we'll talk about tomorrow. Books that you should own and buy, and thoughts on private equity and credit oh, that's a great question. So it was recently announced that some big private equity movers and shakers were enabling private investments in 401ks. There are a lot of doomsayers saying this is so negative and so bad. Look, I am a huge fan. I've said for many years, and it was my soapbox for many years. I tried to find a way to do it, but I just didn't have the right political connections. But I actually believe, look, the 401k plan, if you go back to its roots from the Tax Act of 86, which had nothing to do with taxes, created the 401k plan. And why did it do that? Well, it was actually a grift. So 401ks were created under the guise of giving control of your retirement assets to the average person. And so they'd be portable. Well, that sounded really good on paper, but what it really was a grift to give 30% extra profit to corporations because they no longer had to fully fund the defined benefit plan, right? Defined benefit means you work for a company, they have to provide you a benefit in retirement. Instead, all they do is help you with your contribution. So it was about a 30% decrease in how much they had to pay for pensions. All the risk then got transferred to the individual under the guise of it being portable. Well, then the problem is the only people that could, the only products you could buy were the ones that were approved, which were the mutual fund companies, which had reasonably high fees, despite what Vanguard said. And those fees were also not dissimilar in things like GICs, guaranteed investment contracts, and bonds. And so there were far too many safe options in these 401ks. And so people were misallocating their assets because they're not professional investors. And they were getting charged really pretty high rates. Long story short, I said for years that I thought it should be against the law, literally, to own bonds in your 401k. Think about it. You can't touch the money by law for close to 50 years. So why should you ever hold a bond or a GIC? It should be in things like private equity, private credit, commodities, venture capital, things that are going to appreciate over the long term because you have the advantage of time. So I'm a huge fan. Now, I'm not a fan of the way they're going to do it because they're going to charge too high fees. Now, paying high fees for good performance, you should do 10 times out of 10. Paying high fees for the illiquidity premium, you should do 10 times out of 10. But this structure, I'm not as huge a fan. I don't really like private credit much because you shouldn't be in debt. You should be in equity. I am a fan of private equity, private commodities, and venture capital. So that's a long answer. Thanks for doing these. You are welcome. I'm hearing lots of PIK payments happening with private credit. Yes. Oh, man. So look, private credit is it's one of those things that everybody loves it because they don't mark to market, so it looks like it has no volatility. You get a premium to traditional bonds, and it sounds sexy, right? I can make 8 to 10% making private loans to businesses, and that's great. What never gets talked about is what happens in downturns, economic downturns, and what this question is talking about, this PIK, payment in kind, means if you look at small cap companies, which are where most of these loans are being made, 46% of them can't pay the interest on their debt. Not only can they not pay their debt off, they can't even pay the interest on their debt. So they're basically technically insolvent. So what happens is they don't pay cash, they pay in kind. Well, you're just getting more of a worthless company. And then that doesn't get reported because there's a mark-to-market lag and there's no refinancing. It's extend and pretend. So I've never been a huge fan of private credit. I know everyone in the world loves private credit, but I think that's what's going on. And the problem is I didn't have the slide in here last time, or had the slide in here last time. Bankruptcies just hit a new all-time record. And that's what's happening is companies going bankrupt, debt's getting deferred, getting refinanced. And I think people are going to lose a lot of money in private credit. So a point about, 401k fees getting knocked down. Look, I'm not saying that all fees are bad. I like paying fees for talent. I don't like paying fees for no alpha. I think the problem, my view on 401ks is the types of products that have been allowed in 401ks up to this point have not been high alpha products. They've been index products mostly, and they haven't generated a lot of alpha. And the problem is the mix, right? Too many bonds, not enough stocks, not enough private equity, no venture capital, et cetera. Not very little actual real estate. REITs are different. All right, I have to run to a board meeting. Thank you for the questions. Thank you for being here. Hopefully we'll be back summertime with a different topic. Hopefully we're done with tariffs. And I wish everybody happy graduation if you're going through that, and good start to your summer. Thanks a lot.